recently we held the third annual M&A Outlook event, discussing M&A trends for the coming year. I'm joined by Anna Faelten, who's Deputy Director of our M&A Research Centre here at CAS, who's going to talk me through some of those trends. Thanks for joining us, Anna. First of all, what would you say are going to be the main drivers for M&A over the next year?
I think the next 12 months is going to be very interesting for M&A. Certainly, we're seeing a little bit of a comeback of M&A. So the last 3 years or 4 years have been quite slow. And we have seen some signs both in the last quarter and the first sort of few months of this year, a bit of an uptick. So it'll be interesting to see if this continues. I think the main driver of M&A activity to come this year is actually going to be a lot that's already been in the pipeline. So I think in the last year, especially 2012, perhaps a little bit 2011, there was a lot of talking around transactions. I think a lot of management teams, advisors, etc., were talking a lot about deals, talking about opportunities, but really because of sentiment not being there, you never got over the trigger line. So I think actually it's going to be a lot of these pipeline projects that so a lot of sort of strategic deals that management have wanted to get into, that we're going to see a lot of that coming through if this sentiment or positive sentiment continues. And I think that will be driven very much by both how equity markets hold up, so it tends to lag 6 to 12 months after stable equity markets. You tend to see some increased M&A activity. Also, if we can see a bit of a revival in the IPO market, that will probably also drive some continued M&A activity. But generally, just the sort of view of M&A and then perhaps the negative. There's been a lot of negative press in the last few years. And that's sort of shifting a little bit. So I think that's going to be the main driver for the next 12 months.
And what would you say are going to be the threats to a full M&A recovery?
Well, I think probably the other side of the coin very much. Regulation is a bit of a double-edged sword. I mean, it can be, and this I think was alluded to it in the panel discussion that we had a few weeks ago, that it's very much one of those things that can both drive M&A activity, often around divestment, which is what we're seeing in the financial services industry. But also it can work. It can work both ways. So it can sort of hamper activity in some sense, in the sense of, and that very much around competition commissions coming in and saying no to deals, or regulators of other institutions saying no to deals, and that's what we've seen in the last, certainly 2012. A lot of the deals which were announced never completed for that reason. So it can actually work both ways, and I think also coming back to I guess the drivers. So if we see some increased or sort of back to the volatility around equity markets, I think that would probably be a real dampening effect to any sort of recovery of M&A.
There's been a lot of talk about emerging market players on the M&A scene. What are the trends we're seeing there?
I think this is probably one of the most interesting areas of M&A. I mean, it has been a lot of discussion around developing market companies going into emerging markets and lots of countries in there, especially China and India, some of the bigger markets perhaps, because they're just looking for growth. There's been very little growth here, and although we're seeing perhaps a little bit of positive news coming through in terms of jobs and generally just GDP growth and things like that, it's far away from what we saw, in the last bubble, but also what we've seen in long term in developed markets. And I think people are realizing that that might be the case now for quite some time. So in that sort of quest for growth, a lot of companies, of course, have been looking towards emerging markets. And with that comes a lot of, challenges, additional challenges. I mean, M&A in a general sense are quite difficult to pull off successfully. And I think in any cross-border deals, it just adds a layer of complexity, especially if you're going to, emerging markets or markets that's not very similar to yours, perhaps culturally, also just time difference and things like this. It is much harder to make that work. So, opportunities are there, but challenges remains difficult. But there's another trend here, which is probably what has been talked about a little bit more of a recent, so the last year and especially, and also this year, with emerging market players coming here. So what we're seeing is, especially Europe, being in quite a dire strait, essentially needing quite a lot of capital. And a lot of companies are either in distress or they are so-called zombie companies, which essentially just operate to pay off their own debt, which they accumulated, of course, during the boom period. And a lot of emerging market players having, on the other side, quite a lot of capital. China's state-backed, even a mandate to go and sort of buy resources or whatever it might be. And you have that kind of environment of strong buyers, weakened sellers, and now what we're seeing, as I said before, stabling generally of a little bit less uncertainty, which means that buyers and sellers can meet on valuations, and that kind of creates a good scenario for M&A activity.
We've seen a small upsurge in M&A in the last few weeks. What do you think is driving that, and do you think it's going to carry on through the rest of 2013?
Yeah, so the last few weeks has been a lot about private equity deals, buyout type transactions, Dell being, or at least being discussed as a potential buyout, perhaps the Everything Everywhere being bought out, the joint venture, telecoms joint venture, and obviously the Warren Buffett acquisition of Heinz. And so there's been a lot of these kind of private equity buyout transactions, which we haven't seen almost at all for quite some time. So that's encouraging. I mean, it means essentially that there's possibilities for financing deals, which has been a problem in the past. However, I think that probably it's not going to be that 2013 is the real comeback year for private equity. I mean, of course, due to their fund cyclicality, a lot of them are coming to that period where they either need to invest and also divest their assets that they have in their funds. So I think we will see a little bit more private equity. However, I think these really large buyouts will probably still be the sort of taking the second position to the more corporate strategic type of transactions that I mentioned in the beginning.
What sectors do you think are going to be the most interesting in terms of M&A over the next 12 months?
I'm bound to be wrong here, aren't I? Okay, my bets would be probably in the financial services sector. It's going to be a lot of divestment type of activity, which of course means someone will have to buy these assets. So in a way, it creates M&A activity, but more driven by divestments. I think what was also mentioned in the panel discussion was around consumer staples, consumer products, and that being, as I said before, a lot of emerging market players coming and wanting to buy brands, strong brands, that they then can leverage in their own markets, but also taking some knowledge around build-up of expertise and technology. So probably we'll see that as a sector that's sort of coming up. Real estate tends to be quite a cyclical sector, and we see an uptake of the equity markets. We might see an uptake there. I think mining, which has been mining energy, which has been sort of the leading sector, which has been held up, I would say, in activity more so than other sectors. We'll probably see a little bit less of those type of activity, aside from perhaps the US, where there's a lot of interesting shifts generally. I mean, it's sort of what's happening there with shale gas and fracking technologies is almost redrawing the whole map of energy. So I think, on the back end of that, we'll probably see some acquisitions and some transactions, but I would see the rest of the world probably less so than, at least relative to other sectors.
Anna, thanks for joining us.
Thank you.